2, 1.
And good morning, good afternoon, good evening in podcast land, wherever you are. Brendan Cunningham, the real estate doctor at EXP. And we're here with Matt Paul. Why? Because he does it all. Soup to nuts. We're here to support you, tell you the real story. We don't miss words. In fact, not only do we not miss words, we don't even miss our Matts. Because we have Matt Paul and Matt LaRusch, dueling Matts this morning.
Yes,
We are going to talk to our special guest star who dropped in out of the sky, as they always seem to, about something that we've mentioned it, and shame on us, we haven't explained it. A lot of times when people have to buy a property, they need to get financing. All right. For the guys that don't have cash, they go out and they get financing. Well, there's different ways you can get financing. You can go to your local bank. We always recommend that you always deal with somebody local, whenever possible. You can go to a mortgage banker, mortgage broker. That's another thing you can do. However you work it, though, at some point you may run into a hitch where your average lender that you're going to just doesn't seem to have the product. So far, so good?
Yep.
And that's where Matt LaRusch comes in from 5 Star Bank. 5 Star Bank, local?
We are a local bank. We originated out of Warsaw. We're in Buffalo now.
In Poland? Is that okay.
Warsaw over by Rochester.
Okay.
And we've broken into the Buffalo market now. We've got branches all over Buffalo. We're in Amherst.
But you've been around for a while.
Yeah, we're not
like 100 years or so, right?
We're not new on the block by any means. Some people haven't heard of us as much in the Buffalo market as some of the other players, but I think that's about to change. We have some amazing non-traditional lending products just to go outside your normal box, right? Everybody knows your traditional Fannie Mae loans, conventional loans. Everybody has to fit inside that same box. These types of non-traditional, we call them portfolio
loans, and we've talked about that.
Yep.
And shame on me. I know I'm guilty of this. I don't know if I can throw you under the bus on this either.
Go ahead.
Well, it may have to be a portfolio loan. If you're a sophisticated investor or in the real estate business, you would know what that means. But if you're not, what is it? What's a portfolio loan?
The difference in a portfolio loan or a conventional loan, your standard mortgage products, is we are going to hold this product for the entire length of the life of the loan. We will keep this with us. Our own underwriting guidelines are applied to this. We are lending out 5 Star Bank money.
So it'll never be sold on the secondary market.
It can't be sold. It's a non-sellable loan.
And that's what people really need to understand. Yes. Most mortgages, I can say most, they get sold.
85%.
Some of them get sold on the day of closing.
Oh, every property I've purchased has changed lenders within a month.
You took a loan out with XYZ Bank, and you get your mortgage statement, and it's ABC Bank. How did that happen? It's like you missed that. It happens all the time.
All the time. Yep.
But not in a portfolio loan.
Not with a portfolio, because as I just mentioned, they are not sellable. What we do with these portfolio loans is we're looking at the Buffalo market. We look at specific markets, and our heads of the bank get together and say, what types of mortgages are a reasonable mortgage, limited risk on the bank, because they will think of that. But we have to serve the public in another manner that these standard cookie cutter loans just aren't doing the job. For example, one thing that we're doing, we are offering loans to Canadian buyers. So you do not,
which a lot of people don't.
Yeah.
Okay, that's a thing.
Yep.
So let's talk about the Canadian market.
So with the Canadian market, generally, they have a very tough time getting a mortgage in the States if they don't have U.S. tax returns or things of that nature. We are willing to do on a Canadian buyer, if they're going to move to the U.S., as little as 10% down on a primary mortgage. If they're looking for a second home investment property, your ski cottage or something down by the lake, something of that nature, looking at 15% minimum down, which is much less. Most banks for those types of products, if they offer, are going to require 20%. We also don't have any mortgage insurance associated with these loans whatsoever.
Which is huge.
That will save you a chunk of change on that monthly payment, which we all know that's what it comes down to a lot of times when you're going to this investment property.
PMI could be like private mortgage insurance is like half a point or more.
Yep. 0.5% of your loan amount. So you start looking at these nice houses. Your PMI can be $150 a month, $300 a month, depending on these houses.
Depending on the price, sure.
Yeah, that's a big savings when you're starting to compute that and determining what your ROI is going to be on that.
And also qualifying.
Of course.
Because you not only have to be able to make not only will you have the extra payment, but you have to qualify for the extra payment.
Correct. So we look at debt to income ratio very simply, money coming in compared to money going out. And that is a large determining factor when qualifying somebody for this mortgage. Now we're removing $150 or $300 a month of payment that they can apply that now to a bigger house if they want.
Increases your borrowing ability.
Exactly.
Yep.
Or they just can afford the house that they want to buy now. So some great programs there. We have medical doctor programs where
Dr. Loans.
these people can put down a small percentage and still get into this home without that mortgage insurance. We don't count some of those crazy student loan debts against them. And it is really a great program to get some of those doctors.
Yeah, and so that everyone understands how this is and why this is and how it impacts everything. If you've applied for a mortgage recently, like a regular person, not looking at portfolio products, you probably at some point dropped a minimum of 3 F-bombs. Okay? The F word had to come into the equation at some point, and it wasn't fiduciary.
I was going to say, we're talking fiduciary again?
No, and because they make you fill in so many boxes, and the paperwork just seems to go on and on and on. And the reason why is because, as we said, most mortgages get sold. So what they do is they'll take, let's just say, 10,000 mortgages. And they put them in a package,
Yeah,
okay? And they sell them all up. Well, the person who buys that package, they don't know any of the people in that. They don't know the names. They don't know all they are relying on is what is in front of them on the piece of paper.
Yep.
So everyone is doing CYA on paper like crazy. That's what they'll ask you for. What did this check pay for? And they'll ask you 3 times for it.
Yeah.
Because they got to cover their rear ends on this. With a portfolio loan, it's like it used to be. If I'm getting it wrong.
To an extent, yes.
It's sort of like when you used to go into a bank and it was common sense.
Mm-hmm.
If I had a 3-family house and I had $1,500 coming in income from the house, and my mortgage payment was $1,000, well, this should be a no-brainer for the bank, right?
Yeah.
I mean, they want you to have a job and everything, but they'll take that into consideration more so than the average bank that's going to have squeaky clean all this kind
We
of stuff.
certainly will. We can use assets as income. I recently, about a year ago, did a loan for a well-known restaurant owner. I'm not going to name the name or anything.
We want names.
Yeah. And he had an off year during COVID. Big shock.
Shock.
Right?
Yep.
So we looked at his 2 years of tax returns prior to that. We looked at what he did after, excluded the COVID year, which I could never do with a conventional product.
Oh, God.
That just would not happen. And we called him up, called the accountant. Everybody got warm and cozy. We had a nice meeting, and that loan got through no problem.
Yeah. I love the whole concept of the portfolio. We're going to use some common sense here. It's much more human, human scale. You actually talk to the people.
Yeah, it's a whole different system. I literally, when I have to do a standard conventional loan, your cookie cutter loans, as I call them, I have to run an automated underwriting system, which basically I put the information in, the computer comes back and says yes or no. I can't talk to that computer and say, hey, he had COVID.
Yeah, I don't know if you could, but I like technology, but I have a love-hate relationship. At some point, I want to talk to somebody.
Yeah.
Well,
help me.
Sometimes you need to explain the situation better, right? Because
go to chat. No, I don't want to chat. I want to give me a guy.
Yeah, and our underwriters, they're right here in Buffalo. We've got another group in Rochester, and we can go and talk.
Good local. Good local bank.
And you can make sense of something if they're questioning it, you can kind of justify and give answers and help get.
If all I have is an 800 number, I'm in big trouble.
Yeah. Our underwriters sat down and met with this client.
Mm-hmm.
I've never heard of that. I've been with a couple other lenders throughout my career. Been in the business just shy of 15 years. They were all great lenders, but I've never seen it.
I remember when you first got in, so it seems longer, but that's beside the point.
Yeah, Brendan and I go way back.
Moon, cross sky, many times.
Time goes fast,
Yeah.
We do, and we don't just specialize on the high end.
No.
With this portfolio, we did kind of touch base on those, but we also have other products in this portfolio for first-time home buyers who are making a moderate income, is what it's determined by the New York State Census, by the government census. So the LMI, low to moderate income.
He's good. We already cautioned him. Don't give me any of these freaking abbreviations.
The low to moderate income in Erie County, you're looking at just above $80,000 right now, $80,250. We can fit some people
We can get you in there.
what that allows you to do is you can buy properties in Buffalo with as little as 3% down without this mortgage insurance, as we've talked about. 5-Star also offers an additional $3,000 grant to help the borrower out, as long as they stay in the home for 10 years, minimum time. They can refinance, though. A lot of those types of loans have a caveat on there where you can't refinance the loan, and you're going to be stuck with maybe whatever the interest rate on that day. But because these are our portfolio loans, we are endorsing them. You can refinance this type of product with us, which can save you a lot of money in today's market.
Oh, God.
The future.
Sure.
But then obviously that refi would stay with you as well, because it's a portfolio. It's not going to be sold. So.
Exactly. So these loans stay with us. We offer a couple other little bonuses. If you open a 5-star checking account with auto deduct, we'll give a rate reduction. You will become eligible for our top tier banking account customers, all the bells and whistles. And there's an obvious goal there. We want all of your business. We want you to rely on 5-star for your insurance needs, for everything.
But the auto deduct is just the best. It's frankly the only way to pay your mortgage.
Yeah,
as far as
I
I'm
agree.
concerned. Otherwise, you got to worry about what day is it.
I'm definitely big on the auto deducts.
Auto deduct.
Especially with the snail mail these days too. You know,
Ridiculous.
Yep.
So, but all right. So, what other things do you have in this magic of portfolio?
We've touched briefly.
First time buyers. We talked about Canadians.
Yep. Let's talk about builders for a minute.
Yeah. Great.
New builds. How's that inventory out there, guys? Right.
Well, that's a whole other thing.
It's still limited.
So I come across it all the time. Hey, I've put in X amount of offers. I've been shopping for the last 8 months. I talked to a builder. I should have just stuck with the builder. One of the big things that comes up when building a house is this house is going to take 8 months to be built, right? From the time you start to the time you finish, pick out your plans, go through maybe 6 months, maybe a little longer. I've seen situations where cabinets end up on the 90, you know, God forbid, something like that. But we offer extended rate locks. So, and when I say extended, I mean up to 12 months.
That's extended.
Yeah. Usually it's a week
That's
or two.
insane.
Standard rate locks are good for 60 days.
Yeah.
Doesn't do you much good when you lock. You want to know your rate.
I've heard
know that
90.
mortgage
That's about
payment.
it.
Yeah, maybe you get a 90-day here and there. And you want to lock in that rate on day one and know what your payment's going to be.
Yeah.
There can be a market where all of a sudden you qualified at 5%. Now the rate's almost 7%. You don't qualify for your home.
Yeah. If you're remotely thinking of building and you don't take advantage of this, you're insane at this point, especially with the rates looking to do this.
We don't know what they're going to do. Now, I have some people saying, well, what if they go down? I'm sure that's the very first thought for an extended rate.
I think I know the answer. I know the answer.
As long as we check rates 30 days prior to closing, if rates are lower, you get the float down.
How cool is that? So there's no downside risk.
And there's no fee to that or
no,
anything?
it's a one-time float down. So it's a great program. It gives you that stability to lock in at day one and say, hey, I qualify today. I know I'm qualified.
Okay, and obviously, 5-star, this is a fairly aggressive approach to the market.
Very much so.
Yeah, kudos to you. Smart.
Don't know of many other lenders going after that.
No.
The real reason is because it's too expensive.
Yeah.
Normally, for these extended rate locks, the bank is selling these loans to Fannie Mae or FHA. These entities will charge the bank every month. We have to extend the rate.
Right.
But by us keeping these in our own portfolio, we don't have to charge ourselves.
Right.
Yeah.
We can just
no fees to you.
we put them in.
It's a beautiful thing.
Let's do it.
It really is. Okay.
Wow.
Talked about Canadians. Talked about new builds. We should probably bring some builders here and talk to them about that.
Yeah, I think that'd be a great idea.
Yeah. Okay.
So,
do you have any commercial?
We do all types of commercial. A lot of the builders that we work with, that I work with, we do help them out on the commercial ends too.
Oh, great.
We have some great products, whether it be commercial, whether it's residential. We want your business, Buffalo. Right. We want your business.
Do you have any builders that you're working with right now that are just sort of front loading the financing, and then they're gonna their customers could use them for end loans?
Yep. One of those that we do a lot of that with is Essex.
Essex, love Essex.
They're a great builder.
Yep.
Hopefully they will be possibly joining us on a podcast to come in.
Yeah, I'd love to have them in. I've always admired Essex. I mean, there's a lot of wonderful builders. We have a lot of wonderful things in Buffalo, period. But we're fortunate we have a lot of really, really good builders. Essex has not only always been one, but I always used to say, and hopefully they don't take offenses, I would give them a real strong backhanded compliment and say, they give you too much house for the money. They
That's a
really
good
did.
thing. That's
They
a good
really
thing.
did. I said that their profit margin can't be as good as the other guys.
Replay that and listen to the words.
I-
It is what you
That
heard.
is so good.
Yeah, no, they really build a hell of a
Yeah, no,
house.
I sold one
Yeah.
to a client a few years ago. They absolutely love it.
Yeah,
Still
I've
to this
never heard
day.
anyone complain. Oh yeah, I built an Essex. Shoot me. No one ever said that.
Nope.
Yeah.
And they do, they do the follow up, touch ups and stuff as per what, the year after they move in, they went in and
Phil
did
Manula,
everything.
right?
Yep.
I remember when he first came on the scene. I said, "Wow, this guy's building a hell of a house."
Yeah.
They do an amazing job. Neighborhoods all over.
Yep.
You want to be South Towns, North Towns,
Yep.
East Towns.
Ellicottville,
Yeah.
I haven't seen them in Ellicottville yet.
but they'll go all site.
They will definitely go off site.
Oh, they will do like custom on
Yeah.
a, really? Okay.
And that's where we also can come in. We do vacant lot loans also.
Whoa.
Well, we get a million calls for vacant
Yes,
lot loans all the
yes.
time, and I said, "Listen, the only people that will do it are guys that are going to portfolio that loan." So,
It could also be that hunting cabin.
Oh, yeah,
That
yeah.
doesn't have the proper plumbing or
Gotta have
The
heating.
square
real
footage I ran
Yeah.
into last year, if it's under 600 square feet, that it's not really, you can't really finance it.
Exactly.
it's a cabinet.
Yes, yeah, exactly.
So we have it's called our non-traditional dwelling / vacant land.
Wow. So do you have to have like building plans or anything in place in
Nope.
order to get that?
No,
Really?
there is a little bit more required down for that
Okay.
product. It is 35% down
Okay.
for the vacant lot because those
But-
vacant lot values can be.
But if you're looking to buy a cabin or one of those things, usually it's either cash or
Yeah.
owner financing,
Yes.
where you're gonna have to have a hefty downstroke anyway.
Yep.
So
And we don't go crazy on the interest rates. It's going to be very close to market rate,
Wow.
which is another great point to all these portfolio products. Normally, when you start seeing these one-off products, or
Yeah.
these types
You-
of portfolio products,
Go up
you
a
pay it.
point or
you
two.
got
Yeah,
the
yeah,
rates
yeah.
start to really fly up because it's more risk for the lender.
Sure.
We don't have these add-ons on these portfolio products. So the rate that I've given people an interest rate on investment property, and they're said, "Oh, that's cheaper than the primary home I just bought."
Wow.
And
Wow.
so there are no add-ons to these types of properties for those additional risks.
Yeah.
Wow.
One of the things that we really
great.
try to do here is not only give you the real story, but give you the best story for you. Anyone that you see ever come on our show, these guys have been vetted. These guys are the real deal. This is a good program. This is a good bank, and you do a great job.
Thank you very much.
Otherwise, you wouldn't be here.
Yeah.
And look, he even wore a suit. Now, in truth, he's not wearing trousers. But we're doing the best we can on the short notice.
I only got caught once there.
That's all good. All right, final stages of the descent pattern. Things to remember. Canadians, we want to start working with Canadians. We just say, listen, we've got money.
The borders right
10%
there.
down,
Yep.
15% down. Come across. We'll get you in.
Yeah.
Right?
Yes, and it's not just Canadians. Also, it's Canadian / foreign national.
Oh,
program.
thank you very much. There's
So
a lot of
there
people
are-
want to invest here that aren't
Yep.
from here.
Yep. So
Great.
there are now. They do have to be countries that we can do a little research on, search the financials. We have to see that
We
it's
can't do the money
established.
laundering operation.
Yeah, I guess that's a nice way of putting
Come
it. Sorry, I can be pretty flexible, but
Yeah, well, no one's going to jail here.
Yeah,
None of us
no.
look good in orange saffron.
No,
So,
no, we try
All
to
right.
steer away from all that.
so we got that. With first-time buyers, you've got stuff for them.
Yep.
What did I miss?
you got commercial.
The
you got-
building
yeah,
thing?
Yep.
yeah,
Yes.
Builders.
And we'll make a point of inviting the Essex brothers over here.
at every end we
So,
like to cover. We're not going to just specialize on the builders or just specialize on one group.
It's great.
We probably would get in trouble if we did something.
Yeah,
like today's
yeah,
regulations.
yeah.
It's not why
Nowadays.
we do it, but we want to be the new number one in Buffalo.
Yeah.
We
Well-
want these products.
All encompassing, everything you can
Yeah.
handle, all in house. That's great.
Yeah.
And it's all done locally.
Exactly.
As well.
The
Wow.
underwriting, I go knock on his door.
Yep.
And
yeah, we like local. Remember, if you learn nothing from us, keep it local.
Yes, it's when the transaction's close to the finish
Everything's
line
local.
and things aren't
Local
happening.
real
you
estate
can call
attorney,
somebody and they can get the
Local
job
real
done.
estate agent,
Makes a
local
huge
lender,
difference.
then chances are you're going to have a much easier transaction. So
Absolutely.
But we have to live up to it, right? We have to face
Well, and we have to
customers
earn
in
it.
the community.
We have to-
tomorrow.
Yep.
these guys
absolutely.
he just doesn't expect the business; he has to earn it. Okay, first way he earns it is by reputation and performance. And next time it's okay. Let's throw this guy a ball, see what he does. with it.
You're only as good as your last contract.
Yeah,
Yes,
unfortunately,
right.
yeah, it's like that.
Especially in this business, right?
Yeah.
Every
Yeah.
deal is different.
It's not right, but this is what it is.
Yep.
All right, wrap it up.
Yep. Please like, follow, subscribe. Thanks for tuning in. Let us know if you have any questions that you'd like us to address on the show.
Love it. Brendan
you, Matt.
Cunningham
Sounds good.
says thank you to all of the Matts in the
Yes,
room.
there's a lot
The
of
real
them.
estate doctor says, hey, come in for a checkup.
Thank you.
Thank you.